Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go, generally related to three different topics: wealth building, commodities, and/or financial topics. So we're going to dive right in, take a look, see what people are sharing. If you want to follow me at Finance, join our community, finding-value.com, where I dive deeper into these topics, looking for potential investment opportunities. So North Star says silver. This indicator says a multi-year surge of hundreds of percents is likely. So this is the Dow to gold 7-year rate of change has turned negative once more. And this is where the special sauce starts to happen. It's when you break below the red line where things start to get interesting. Silver rose 2,000% in 9 years when it broke below this ratio threshold point to the downside. When it broke it in 2004, silver rose 600% in 7 years. And right now, we just broke through it again. And what's really cool on this is that silver is sitting on top of the handle with small red candlesticks and gigantic green candlesticks on the breakout, which signifies to me that we are ready to launch at any second. Makes me even more bullish on the sector. There are also quite a few insanely good opportunities to buy some of the silver mining stocks that are still way, way down. And those are some of the ones that I share on the website of those entry points. There's a few that I released in the midweek update that I think look absolutely excellent for this type of setup to benefit from when this does fall. So again, this doesn't happen often in history. I'm showing you three times in history: one in 1971, another time in 2004, and an opportunity we have today. So what I'm going to tell you as investors, as Warren Buffett said in some of these quotes, and Howard Marks, and some of the greats, when you get opportunities like this, you need to seize it because they don't occur often. Three times in history, seize this opportunity, in my opinion. I am going to seize it. And when I mean seize it, I put some high risk, I put some money in some high risk companies. I put some money into some of the producers. I spread my bets across and I hope to capture whatever the returns are. I even spread my bets in the physical. And if we get a move like this where it goes up 2,000%, which is 20 times on the physical, I can't imagine what some of the miners could do if that were to repeat. Even a 600% increase would be something incredible. Absolutely incredible. And you know what else makes this even a stronger case? The currencies are aligned like they were during these times too. The commodity currencies are about to outperform the dollar. Really good setup here. Seize it, guys. Seize the opportunity. Tavi says this is the annual gold production of the world's second largest precious metals miner, the lowest level in more than 20 years, according to its most recent report. From this perspective, today's environment closely resembles the 1970s. Back then, major miners shifted focus to other metals due to the low gold prices, just before one of the most significant secular bull runs for the metal in industry history. Similarly, the current lack of exploration budgets and development of new gold mines mirrors that period. However, today the shift isn't driven by price, but by a push for mining companies to increase their exposure to base metals, aiming to attract institutional capital towards electrification efforts. Many miners are now avoiding gold-only projects, instead favoring deposits with significant copper or other industrial metals. I'm not a contrarian just to be a contrarian. I believe gold prices have several potential pathways to rise, making gold-only projects even more attractive in a world where our industry is neglecting them. I believe it's time to be greedy when others are being fearful. I completely agree with that. I completely agree with what he's saying here. We have a full alignment that doesn't come very often. We can dive into a bunch of gold and silver mining companies this weekend during the question and answer session to benefit from this. Obviously, you guys know my favorites, but this is a really low point. Barrick Gold also has come out with a projection out in the future of supply in the future, and the supply is projected to decline all the way out to 2030, just like it did in the 1970s, just like it did in the 2000s. It's the same stinking setup. One of the things that is different is we're coming into a rising or increasing interest rate environment, which is, I think, going to put even more pressure for these to go higher. The setup here is incredibly good, and I hope people take full advantage of it for their families to generate what could be uh, generational wealth. It could be. Here's Brandon Balo, and I hate to say this, this picture is exactly what I think in my head. It says the real winner of the debate, gold prices. He says Trump won that debate, Kamala won that debate, and it says I should own more gold. It's ever since um, I would say ever since like mid 2000s, I started watching stuff. I got interested when I graduated college, which was the mid 2000s. 2004 is when I graduated. And I just went directly as I started learning and researching things. It took me about a year to kind of wake up to everything and research it all. But I started waking up. I'm like, man, I think precious metals are pretty good. And 2005, 2009, there were some spots that I purchased metals throughout the year. And this is exactly what I think when I listen to some of these debates. I'm like, man, I should own way more gold. I even tell my parents this. I'm like, you know what? They talk about these debates, and I say, yeah, you should just buy more gold. Get out of the system. It's funny. Another one from Brandon says, things you see at cyclical bottoms. Thank you for your sacrifice, oil stock bag holder. It says, I'm out, boys, liquidated everything. I'm done with oil stocks after 10 years of stress and miserable returns. Wish you all the best, but at this point in my life, I don't need the aggravation. Yes, I too am sure this market marks the bottom, but so be it. I will put my cash into VOO. Hopefully, it's not being serious. But I'm in oil stocks heavily since 2020, and I'm going to see this through, guys. I'm not going to sell. I think there's going to be incredible upside for not only precious metals and all that stuff, but there's going to be incredible upside for all of the commodity sectors, all of them. Copper is going to rip, oil is going to rip, nat gas is going to rip, uranium is going to rip. It's all going to rip. And then you got to choose the companies that you want to take the ride, the ride along with. Crude oil, so the 700K Libya offline, 425,000 barrels of Gulf offline. Big unexpected API draw today, and the fewest net longs since at least 2011, and nobody cares. That's a great thing. Take this as an opportunity to get long. And I know that we're probably early. We could be where that yield curve continues to uninvert, and I think that's what everybody's thinking. They've got that yield curve in the back of their head saying, "Hey, you know what? It's uninverted." But it doesn't mean you have to go long with everything. You can find good setups, take the setups that look good, and then slowly, create strategies where you might not go 100% in, keep some cash, maybe drip some in every once in a while, and then if the market starts to turn, add larger amounts when it turn after it turns. You don't have to do everything in one shot, which seems a lot of people seem to do that. Grady says, can post this chart now as I think it has turned inside the massive blue triangle for the last time. The oil sector led the commodities baby bull move up from the bear low in 2020. This chart says it's now time for precious metals to shine, and precious metals sector has been showing strength the last few years as expected, and oil is now breaking down. The move in precious metals miners have only just begun. The charts are now set up to climb the right side of huge rounded bottoms. Most will not get into a bull market mindset until it is too late, though. So be one of the few that catches the whole move, the move of a lifetime. So this is the Huey, the Gold Bugs Index versus XLE, which is an ETF. You can see this is starting to work its way on up. He thinks this is going to be a reverse symmetry move that is likely. You can also have XLE move up and the gold and silver mining companies move up faster. But most of the time, you'll see XLE or oil go down opposite of gold going up. So that could last for a period of time. Here's Grady with emerging markets versus the U.S. markets, the S&P 500. With BRICS plus East taking over, coming gold-backed currency, phasing out petrodollar, oil for gold deal, starting their own global institutions, new global payment systems. And this stock market ratio chart makes sense. A big change is coming in the future. And he's got a very probable false breakout in the making, which is way down there for emerging markets. What a wonderful opportunity to buy a contrarian view on emerging markets. I think there's some really good entry points in emerging markets right now. What he says here is that 16-year bullish falling wedge tells us that the odds for a global shift in the general stock markets are high, a shift towards emerging markets. We're also seeing that in the currency markets too. Here's silver. There's the big flag pattern that he's got. Silver is still holding 2850 level. If no backtest to blue line, it would mean we have a historical lockout move. So this is a secular bull second leg, the big one. This is your first secular first leg from 2000 to 2011, and we're starting the second big leg. This thing is going to be absolutely fantastic to ride in some of the silver companies. The powerful demographics, lots of 33-year-olds, also a lot of 23-year-olds. So demographics are tailwind to housing demand. And we're looking for first-time home buyers. And many 33-year-old first-time home buyers, there's a big jump from age 52. You can see how the demographic goes up here of home buyers all the way out to 33 years old. There's also a big group at 23 years old. So that's the demographic. The size of these candles going up like this means more and more buyers are coming into first-time home buyer age. And that's what I look at for demographics. It does decline after out here, but those home buyers are not home buyers yet. They're just little kids. So you can't use this side of the demographics yet and project that for the housing market, which some people do on Twitter. Oil has bottomed in his opinion. Commodities are going to go on a tear. I don't know if they've bottomed yet. I'm not that convinced, but it could be. And I just watch it. And we'll see if we get a bounce and some good buying pressure and how sustaining that is. But I'm not going to sell anyway. It takes all the pressure off if you're not going to sell and you just hold companies. And if they've got 10, 15% dividend yields, perfect. I'll get paid to sit. And if we move on up, those dividends will increase as the price goes on up eventually. And I'll be completely happy. But trying to time this in the short term is pretty tough. What I'll say. It's very tough. Kenny says, broke parents raise broke children. Here are some of the lessons that wealthy parents teach their children that poor parents do not. One thing that I will say that I was taught and what I observed in my family, my parents were really good savers. So I learned how to balance, my budget. I learned how to be basically to maximize my income and reduce my expenses, and then basically maximize my savings. What I didn't learn was how to invest and accumulate assets. That's what I didn't learn from my parents that I had to learn from myself. So here is assets versus liabilities. Assets are what you own. Liabilities are what you owe. Poor people do not realize that liabilities cost them money and don't generate revenues. They're not entitled to anything. That's something the kids learn. I'm not going to read all of this. Money is a tool and it's a good thing. Financial literacy, making money and preserving it is a skill set. Wealthy parents pass on knowledge about finances. Networking, successful people teach their kids how to socialize. Use of good debt and avoid bad debt. The rich know how that bad debt makes you poor, while good debt makes you rich. 80% of results come from 20% of the efforts. They're talking about the Pareto principle here. Solving a problem is how you can get rich. And that's really what all businesses are focused around, is solving problems. Knowledge is worth more than any sum of money. The wealthy understand that value of investing in yourself. Money does not make you a better person. It just amplifies who you really are. Stop expecting immediate results. Wealth is made over time. Instant gratification does not lead to success, which I agree with. Increase income instead of lowering expenses. I usually do both. Poor people focus on expenses. Lowering expenses and not increasing income will not build wealth. Have money work for you. Poor people exchange time for money and spend it. Wealthy people exchange money for time by investing in assets, which I need. I wanted to learn how to make more money from my assets. And that's what I'm doing. And that's where the website teaches people how to look at potential income producing assets like dividend paying stocks or assets of just investing in companies, and how to do that when they're cheap. Calvin says, I've lost basically all my subscribers. My online businesses are totally dead. A warning for anyone who thinks they can build a business as a newsletter writer. Not even a year of bad calls will lose you all of your customers. They're renting profits, nothing more. This is generally what you see at a bottom, guys. He's going a little bit off the deep end. I know there was a company specific to a couple companies that he's gone into that haven't performed that well. All I'm going to say is this. Um, you can be undervalued and companies can become more undervalued. There's a lot of people that say, oh, well, we can avoid that. We can just do a bunch of technical analysis. Well, I mean, you lose your symmetry if you wait too long to get into the position. So buying early is difficult, and sometimes you go through these big pullbacks. I think he's got okay companies, at least some of the companies I've seen. They don't look that bad. And I think he's got decent entry points. But you know what? It's really hard to pick the absolute bottom. And people get mad when they're not at the absolute bottom. And there's no way to tell if something's at the absolute bottom. There are things that we can look at, like an uninversion of the yield curve could potentially bring those stocks lower, but we don't know for sure. And that's where Charlie and Warren Buffett tell everyone, you need to be ready to take a 40, 50, 60, 70% loss at some point in your account. And that's what exactly he's going through. So I think the companies he's in and the sectors that he has chosen are absolutely excellent sectors. I just think you're going through a potential slowdown here, and there's some selling pressure. That happens. It's part of the game. And if people don't want those losses, you shouldn't be in the game at all. It's part of the game. It's going to happen if you're a long-term investor. Period. Like, it will happen at some point. It's not if it will happen. It's just when will that happen? And I've had plenty of positions go down 30, 40, 50%. And I buy more because I'm convinced in the longer, bigger picture cycle. It says most great investments begin in discomfort. Howard Marks. This is discomfort. He says most great investments begin in discomfort. The things most people feel good about, investments where the underlying premise is widely accepted, the recent performance has been positive, and the outlook is rosy, are unlikely to be available at bargain prices. Rather, bargains are usually found among things that are controversial, that people are pessimistic about, and that have been performing badly of late. And that's where the opportunity is. It is the difference between actuality and the sentiment. And you got to be where the sentiment is crap if you want to try to make a lot of money. And if you really want to make a lot of money, you want to find sectors that have been down for 10, 12 years. That is the first half of the real estate cycle. Then when the real estate cycle hits a certain point, it inflects. And that's when it comes into favor. And that's what you need to understand about the cycles, in my opinion. Oil longs are the lowest on record down here. So that's good if you want to go long oil at some point. Is it in the short term? I don't know if it's going to be the short term, but at some point it will look good. 24% of oil production at U.S. Gulf of Mexico shut as Tropical Storm Francine moves across western portion of the Gulf. We've got Jordan Roy uh, Byrne, however you say it, Byrne. This has never happened before in the gold market. A cyclical bull and a major breakout, and gold can't outperform the stock market. Gold even outperformed the stock market during the August 2018 to August 2020 period, in which it gained 85%. But gold has actually quietly outperformed since the breakout era. If this fledgling uptrend has legs to above zero point 0.5, it will change everything. So this is gold divided by the S&P 500. We've been working our way on up, but we haven't broken out of 0.5 to basically put us into an uptrend. Gold has broken out, but it hasn't outperformed the S&P 500 and broken out against the S&P 500 yet. When it does, we could see a big move in gold, which I agree with. And silver's obviously, that's broken this resistance level through here, and it's just been tracking sideways. I think we'll see a big move in silver at some point here soon too. Housing and the economy, the first time since 2020, both single-family and multifamily units under construction are falling. This cannot persist without triggering construction layoffs. So this is single-family home coming down. This is multifamily home. This is where I'm watching, because if this does persist to the downside, we will see construction employment layoffs. And if we do get that, that will be recessionary. That will have an impact. If this turns higher and construction employment stays high, that is your soft landing scenario. That's the difference between a hard landing and a soft landing. We'll see if he can pull it off. Powell, that is. And that's where we're going to end it, guys. So that's what I've got for today. Thumb up the content, subscribe to the channel, subscribe to the website if you'd like. Mayday is the coupon code, Mayday. And we'll catch you guys next time. This is Finding Value.